Assalamu alaikum. Good morning to another edition of 117 Halal Fund discussions. So I'm your host, Junaid Abu Suleiman, and our able presenter is Malam Imran Musa. So, with that being said, I think we can start.
All right, thank you, Janine. Sure.
So, Malam Imran, are you ready for us?
Sure. Good to go.
As the audience is already aware, the 117 Capital Limited has recently launched its maiden 117 Halal Fund. It's a mutual fund fully licensed by the Securities and Exchange Commission, SEC Nigeria. Without further ado, let me ask the first question to Malam Imran. So Malam Imran, please, what is a mutual fund, and historically, has it been instrumental in growing wealth?
Okay. Firstly, Assalamu alaikum to everybody, and thank you very much, Junaid, for that question. Welcome everyone on board, all of you who are here. By the way, if you have the links, you can, while this is going on, you could share to your friends to benefit. And also, while the session goes on, you could jot your questions, because after the talk, we're going to have about 10-20 minutes for live Q&A questions sessions where you could throw in your questions about the mutual fund and 117 in general. So down to your question, Junaid, what is a mutual fund? In simple terms, a mutual fund is when you pool funds, you pool money from various investors, put it into a fund, and then invest it into diversified portfolios. So you pool money from a lot of people. It doesn't matter how many, 1,000, 2,000, 10,000, 1 million, you pool money from a lot of people into one fund. And then that fund now is mutually together invested into various diversified portfolios. For example, us in 117, we take this fund, we invest it into various things like asset-backed contracts, equities, Sharia-compliant equities, also asset-backed transactions, yes, Sharia-compliant equities, cash and cash equivalents, and the like. So we diversify this money into various portfolios to ensure that it grows and the individual or the institution investing generates profits off it. So you're talking about from a historical point of view, has it been beneficial? So a mutual fund has been in existence for quite a very long time, and it has always been instrumental in growth. And how can we don't need to go into nitty-gritties of history, but we can look at top investors around the world and what they've said about the mutual fund. So the founder, or someone who we regard as the father of the mutual fund, is John Bogle, the founder of Vanguard. And he had championed the mutual fund industry. And he has mentioned that the mutual fund is a great way for retail investors, individual investors, to grow their wealth. One of the most, or we would say the most successful investor in history, Warren Buffett, one of the executives or the founder of Berkshire Hathaway, he mentioned in his annual notes to the shareholders of Berkshire that the mutual funds, the S&P index fund, which is a type of mutual fund, is a way to go for one to slowly and steadily grow their wealth. So Warren Buffett has always been a champion or advocate of long-term investing. He says that short-term is too volatile, long-term would definitely get you to where you want to go to. A lot of other people, Ray Dalio, who's the founder of Bridgewater Associates, he also mentioned although he used to be a manager of a hedge fund, but he also mentioned the importance of having money in a mutual fund. We have Benjamin Graham, who's the father of value investing, and he is the mentor of Warren Buffett. And he said that the individual investor should not act like a speculator, should act like an investor, focus on what you know for sure would grow for you, and not speculations. A lot of other people, Peter Lynch, and we could go on. So historically, it has been proven that mutual funds aid people in growing wealth. And you would ask how? So if we're looking at it from this long-term discussions like the likes of Warren Buffett, If you put your money in an S&P index, it grows at around 11, 12%. You do that for 10 years untouched. If you start with so people who had their money in the S&P index in 1980 at about $10,000 to $20,000, about 20 years later, they had appreciated, or wealth had appreciated to almost $20 million, if I'm not mistaken. So that's long term, which Warren is talking about. And same thing with mutual funds in Nigeria. They perform above those 10, 12%. Like, for example, here at 117, the mutual fund, we benchmarked it at the current performance of the FGN Sukuk 4, which is around 16%. So if one is compounding that over years, then you would see that you are able to stay afloat. You're able to stay afloat. So for sure, the mutual fund has historically proven itself to be a stable and steady way to grow, especially for individual investors.
All right, thank you very much for that enlightening piece. Okay, the next question is, given Nigeria's high inflation rates, such as the example of a Peugeot 406 increasing from 1 million naira in value in 2014 to 5 million naira in value in 2024, sorry, how can a mutual fund help keep an investor's wealth above inflation?
Okay, so we cannot deny the concept that Nigeria is but Nigeria is a volatile economy, and there is inflation, unpredictable inflation. However, how can a mutual fund help you? Firstly, before we dive into whether a mutual fund will help you or not, we need to understand that for you to grow your wealth, there's the concept of what you call diversification. A mutual fund would first of all assist in terms of keeping you afloat of inflation. So if you have a couple of options. You have keeping the money in the bank, inflation eating it, putting it in low risk investments like a mutual fund and it growing close 20%, or going into a higher risk business, maybe going into a transaction that is high risk but can give you 100, 200%, but the chances of the transaction pulling through is 10%. So the chances of you losing the money is 90%. So this now brings us to the discussion of risk appetite. You have to now gauge your risk appetite. We have three broad classes of investors. We have who you call the conservative investors, who are the people who try to take the outlined steps given by people like Warren Buffett and Benjamin Graham, who say take it slow and steady and you win the race. Or you have moderate investors who do a mix. They do a little bit of conservative, but they have some amount of money to give into higher risk investments. And then you have the aggressive investors who all they want to do is push in for risk. So this also is not just a psychological thing with regards to what you are aligned towards, but also it also depends on how much you have. If you have $100 million in your account, it is easy for you to take $10 million and push for something very risky or doesn't make sense to anyone. But if you have 10 million naira in your account, do you want to take 10 million and do all or nothing? And if it falls in nothing, you're broke. So the concept of a mutual fund, going back to your question, keeping you afloat of inflation, is one which is practical, especially considering the fact that our mutual fund is not a fixed one. Secondly, we have experts handling this fund, which means when certain investments are very much exposed to the inflation of the country, our portfolio managers can generally do some adjustments to tilt investments towards those which are performing better at that time. And considering that it's not a fixed investment, which means if we've told you 15%, for example, as a benchmark, and our portfolio managers are able to use their expertise to work around inflation, what happens is that you go, above 15, maybe 20, 25%. So the concept around it is that it not being fixed and we having experts to handle it, and considering the risk appetite of the average Nigerian, we still would say that the mutual fund is one of the best investments to key into despite inflation.
right, thank you very much. So you mentioned that the mutual funds offer stability, right? However, in an era of increasing interest in fintech, cryptocurrencies, and other instruments, how do you see the long-term relevance of traditional mutual funds compared to these new investment options?
Okay, so again, this takes us back to the concept of diversification. A lot of new things are coming on board, cryptocurrency, these kind of things that come on board, mostly crypto and trading and all of these things. So first thing, coming from a ethical point of view, before you engage in each and every one, you need to be able to speak to experts to do a proper audit of it to tell you if this is Sharia compliant or not. Can I deal in this specific crypto asset or not? So if you get that clearance and you choose to go in, we all acknowledge that cryptocurrency is what we would call a high risk investment because it's not backed by any asset. We do not know why it goes up or down. And when you choose to engage, someone will say he has the expertise in trading. A lot of it is speculation. So when you walk around that speculative market, people make large chunk of losses daily. It's the same way people make profits daily. So if one passes the check of, okay, this is permissible for me, this is halal for me to delve in, and they choose to delve in, would you want to take all of your funds and put it there? Definitely not, because it's a win or loss thing. You can win and you can lose heavily. And we've seen people who have lost heavily even amongst our circles here, and it's been very hard. So the traditional mutual fund will definitely stay. Why will it stay? Because it offers that stability. So if you have 100% of investable funds, and you say, okay, I'll put 70% in a mutual fund because it's stable for me, and I'll take 30% and put it in whatever high risk this stuff I want to do, maybe crypto or maybe real business itself, because business itself is even, it requires time, requires effort, and you can still lose. How many people, I'm sure amongst the audience, you might find people who have done 3, 4, 5 businesses. You put it in those, but you know that you have a large chunk of reserve that is growing slowly and steadily at 15, 18, 19, 20% while you explore. If your crypto business goes well, or if your whatever business you're doing goes well, then yeah, you hit the jackpot. But you do not want to risk it all and then lose it all. You want to risk some. If you lose it, you have a reserve. If you win, you're the lucky guy. So I think traditional mutual funds are definitely here to stay, despite the technological advancements.
All right. So, let's say, assuming you manage to stay above inflation, that's great for preserving wealth, but it's not necessarily making someone super rich. Why shouldn't, for example, I just take my money and put in a business or a high risk transaction that might make me richer?
Yeah, so this is just a continuation of what we just said, right? The concept of diversifying portfolios. I wouldn't advise you to take all of your money. If you have 1 million, 10 million, 20 million investable funds, I wouldn't advise you to take all of it and put in a mutual fund. I would advise you to take a chunk of it, let's say 50%, 60%, regardless of, depending on what your plan is, put it in a mutual fund, take the rest of it, do some studies yourself, speak to experts as well, and then look for how to diversify that. Look at stock, learn a little bit of stock, which ethically approved stocks can I buy and see, and put a little bit of funds there, maybe 100, 200K. Okay, can I buy asset like a land with 3, 4, 5 million? You could do that. But then you want your reserve that grows slow and steady to be the large chunk of it, because you know that I'm most likely not losing this, but I can buy stock and it goes down. For those of us who trade in the stock market, we see how I've lost a lot of money there. So you still want to do it if you know how to do it. You want to put some funds there. You want to look for other things. You're interested in catering. You want to start a restaurant. Okay, yeah, I want to start it. I want to put my money there. Yeah, all those things you have, but you should have a big chunk of reserve that is not just sitting in the bank as a savings, but it's in an investment like the mutual fund that is growing at a steady rate while you explore with what you can afford to lose. And this is what I would advise to the average investor. So despite you staying afloat of inflation, try one or two of those risky transactions that you have done your due diligence on. So don't just say it's risk and it can work. Do your due diligence, try it. It might work, but know that you can lose the money as well, while your large chunk of reserve is in a mutual fund.
Basically, here the key here is diversification, right?
Yeah, sure.
Okay, next question. So we've been talking about long-term growth and compounding, but what about someone who's not looking at such a long-term horizon? Let's say they want to have their money grow, but still need access to it in an emergency, when an emergency arises. How does a mutual fund benefit someone like that?
Okay, so if I understand you, you're looking at the concept of, because we've been speaking about how people like Warren Buffett have spoken about compounding over 10 years, 15 years, and seeing how much you grow in wealth through a mutual fund. But some of us are not looking for 10 years, 15 years. You're looking for investments that in shorter terms, I can make profit, and you're trying to see if a mutual fund aligns with that. Yes, for sure, a mutual fund does. So one thing we need to understand about mutual funds and its advantages is its liquidity. It's very much liquid. It's very much liquid. For 117 specifically, when you invest your money in the mutual fund, we have what we call a lock-in period of 90 days. And then after 90 days, you can always redeem units of your mutual fund. And the mutual fund units grow on a daily. So today now you might be buying one unit at 100 Naira. Tomorrow, you're buying one unit at 101. Let's say next week you're buying at 102. So let's assume 6 months in, one unit is 115 or 120, for example, which is a 15 or 20 Naira growth on it. And then you say, okay, I need some of my money, or I need all of my money. I want to redeem it. What happens now is that you've made a 15 Naira growth within the period of 6 months. And that is why it's great that this is not fixed as well, because you can grow above the benchmark or slightly below the benchmark, depending on volatilities. And despite it, long-term, short-term, you can access money. Another thing which I want to give as an advice is people who can use the mutual fund as in the broader spectrum of what you call an emergency fund. So we all have an emergency fund, which is the money which you keep in your savings. And in case anything comes up, I can pull out of it. So because of the liquidity of a mutual fund, something that if you want to redeem some of your units and make it liquid, you can do that in 3 to 5 business days. If you put your emergency funds as well in a mutual fund, or a chunk of your emergency funds in a mutual fund, what that means is it's still as if your money is in a savings account, but it's growing. And in 3 to 5 business days, if you say, okay, I have 10,000 units, I want 1,000 units redeemed, you can speak to your account officer and you get it. So long-term or short-term, a mutual fund will work for you. It's just down for us to tailor it to what, or tell you how it aligns with your goals. But a mutual fund is still great for short-term because it serves as a savings box that appreciates.
All right.
And then just to add to that, before you move to your next question, one thing about the 117 mutual fund is that it doesn't have to be one-off, right? If you are a salary earner and you say, okay, 50,000 is what I want to put aside daily, or 20,000, you can do that on a monthly. So you could always, just the way you could deposit in your bank, you could always buy more units of the mutual fund on a regular basis. So the growth happens together. So the concept of it being great for people who earn salaries, people who want to save money. It's a very, very good one for them.
All right. Thank you very much. So for some of us, what we really are looking for is passive income. We want investments that will suddenly generate funds and run our day-to-day expenses, like covering household costs. How can a mutual fund or other products help us achieve this?
So for people who are looking for passive income, there's someone who told me, look, I'm just looking for how I wouldn't be bothered about my wife asking me for money for the house. I want something that can generate money for the house while I try to grow wealth in other ways. So a mutual fund can work. However, it's not the best option. So a mutual fund, we pay out profits at the end of the year, unless you're redeeming your units, but profits are paid at the end of the year. For such a person, I would advise they go for our Mudaraba private portfolio. So the Mudaraba private portfolio has the opening for profits to be paid to you monthly or every 2 months, every 3 months, every 6 months, depending on how you want it. So there's someone who had spoken to me about this issue which you mentioned, and I asked him, how much is your household expense? And he said it can run up to like 500,000 per month. And I said, how much do you have liquid for investing? And he said he had almost 100 million to invest. So I told him, you know what? Give us 50. If you give me 50 and I give you a good rate around 15, 16% per annum on a benchmark, what happens here is this client puts the money, and in a month he's able to work around almost 600,000 monthly. So because the profits are now prorated to monthly basis, and he's able to get about 600,000 monthly to run all of his household expenses while his 50 million is still intact. So depending on your household, or if you can say, okay, I don't have that amount of money, I have 10 million, how much profits can I make? Can I make 100,000? Can I make one? What can I make from this amount of money that I have that can augment my house runnings while the capital remains intact? So why this is ideal for people like this is they most likely run full-time jobs or full-time businesses, and they cannot start another one and give it time. So there's a high possibility that they will put their money in a business and not have time to run it, and it runs down, including profits and capital. So that's why they look out for these kind of options, that they know that, okay, I have people who are managing this for me, and they can work with their expertise to generate this profit for me that will run my house monthly. So I would advise whoever is thinking about that to explore the private portfolio. And it starts from $1 million and above. You explore it, we have the discussions, we look at your goals, why you want to do it, and we tell you what is best for you.
All right, thank you very much, next question, please. So now that we discussed the mutual fund for long-term growth and the Mudaraba private portfolio for passive income, how should an investor think about diversification? I know we've been talking about that in the previous questions. Also, should they focus entirely on one of these, or is it better to combine them with other investment types to balance risks and returns?
Okay. So every investor is different, and his reason for investing is peculiar. So at 117, what we do is you come to us, you speak to us about, okay, these are your goals, and then we can advise. However, diversification is always key. Even for someone who just wants to run what I just mentioned, trying to get passive income to run their household, you will still want to think long term as well. And we'll still advise that, okay, from your 100 million, which you said you have as investable money, okay, put some 20 million in the mutual fund and leave it. Let it just grow while you run your passive income thing, get your monthly returns. Same thing. So 117 offers you that wide array of diversification. Aside from the mutual fund, you could put some money there, just leave it there if you have. And if you don't have up to the money the 1 million for the private portfolio, just put all the money in the mutual fund, watch it grow until you grow up to the level of doing the private portfolio. Another thing for people, Muslims or non-Muslims alike, is your CSR, your community service. How do you give back to community? Then that's where 117 comes in with what we call our Waqf fund, right? So for Waqf, it's an endowment fund where you invest money. So let's assume you invest 100,000, 1 million naira with us, and let's assume that Waqf fund performs at 20% per annum. That's 200,000 in the profits made. About 70 to 80% of that profit is taken and put into charitable causes of your choice, as long as it aligns with the company's policy. So it can be something which you tell us, okay, go and use it to do anything charitable, or you can even come and say, oh, in my community, we are building a borehole, or we are building so and so. Can you use part of this money to finance those projects? So regardless of how you want it, this can be your CSR. So your diversification can also include investing into your CSR. And the benefits there is if you took 1 million and you put it out for a project and you say, okay, you're building a borehole, that's it. What a worker fund offers differently is that you have 1 million and that 1 million can continue to work for you in CSR for 10, 20 years. And it grows as well because part of the returns is put back into the fund and reinvested. So there's that aspect of it in your diversification. It covers your CSR. Then when you now say, okay, I have some funds, I want to now deal in assets, higher risk investments, but I am also scared about not losing it all. Then you still come to 117 to discuss wealth management. Okay, I've bought 1 or 2 assets. I'm looking at how can I do wealth management? Then our guys in wealth management, like Junaid here, would now sit down with you and say, okay, what assets do you have? What are the asset classes? What can we do with it? And by assets, it's anything. It's land, it's properties, it's jewelry, it's facilities, it's businesses. You come to 117, they help you manage it. I have dormant assets that are not creating any wealth, or I have money I'm planning to. You come to 117 for that as well. Okay, Nigeria is this naira self. It get as it be, that kind of thing. Then 117 now tells you, okay, we're currently working to see how we can launch a USD fund. Okay, you want to diversify some money into a USD fund. Once we launch that, so 117 is your one-stop. It's your one-stop for investment, and that's why we understand people are different. So we provide this wide array of diversification. I want to do something for my kids. I want to do something. Then we tell you we can open investments for your kids as well. So the concept of diversification is great, but we would advise that you speak to us and we can advise you on how you can share your money into various portfolios so that if we meet in the next 5-10 years, and you are maybe a 50 million net worth individual, and at that time you're now a 500 million net worth individual, you can shake my hand and Junaid's hand and the MD's hand and say 117 has been your partner in success.
All right. So again, just like you mentioned, the key here is the key here is diversification.
Yes, calculated diversification.
You don't just put all your eggs in one basket. Apart from investing in the mutual fund, you should also consider work-off and the private Mudarba investment account. So thank you. So next question, please. So many potential investors may be unfamiliar with the technicalities of investing in a mutual fund. How does 117 Capital Limited support and educate its investors throughout their investment journey to ensure they're making informed decisions?
Yeah, so that's important. This webinar is one of it, right? 117, we do not just want you to bring your money. We want you to know what you're doing with what that money is coming into. And that's why we have created these webinar series to address issues, the Sharia compliance, how the money grows, how the money works, all of these discussions, because we're trying to be very transparent and bring these investors to be part of the process. So by this, we're informing people about it. I'm sure some of the audience here, maybe Samuel or Mustafa, Aisha or Iman, would, after attending 3, 4, 5 sessions, will speak to their friends and their friends will be like, do you work at 117? Because of how much knowledge they've gotten about the mutual fund and 117's products in general. Another thing which we do here at 117 is that we try to be at almost every relevant event. So we are at almost every relevant event, business summits, for people to be able to listen to us and hear what we do, how we do it. And then thirdly, we ensure that our customer service guys are well informed and always in communication with the investors to provide them full information about what they need to know with regards to our products and our services. So 117, we are taking the lead role in ensuring that not just 117 products, but financial investing, personal investing, long-term, short-term, is broken down into the nitty-gritty for everybody to understand, for everybody to be able to digest.
So basically, what you're trying to say, or what you've said, just to highlight, is just that this workshop is one of the ways which we can educate our investors. Also, all our audience can join us at the office, can come visit us at the office, or give us a call if you have any questions. All right, thank you very much, Mal Imran, for such an enlightening discussion.
Yeah, it's our pleasure. Let's wait and see if there are any questions. Are there any from the chat box? You can check if there's anyone with a question. If there's none, throw in your questions now. And if you don't want to type it, you want to say it, then you can just raise your hand. Okay, Halal, I think your hand is up. Do you want to ask a question? If you want to, then please go on.
Assalamu alaikum. Elder, can you hear me? Imran, can you hear me?
Walaikum salam. Yes, I can.
All right. So when you mentioned Mudaraba concept, I've heard for a long time now. I didn't do finance or Islamic finance. So, but I would do also research that. So when you mentioned the concept people have in 117 and how you give monthly pays, let me just call it monthly pays or 6 months pays to individuals, how many percent of what they invested are you giving back to them?
So, okay, thank you. I understand that. If I understand what you're trying to address, you're trying to address the concept of the profit sharing. Right. Halal?
Yeah, if that's what it's called. Yes, basically.
Yeah, so you're trying to address the concept of the profit sharing. So at 117, with the Mudaraba, we have about a 60-40 profit sharing ratio, whereby the investor is taking 60% and then the company is keeping 40%. And then outside that, if there is a surplus, there's also a profit sharing ratio for the surplus, where we now sit down and say, okay, we said we can perform. We can perform in a way that your 60% is up to 15% per annum for you of your capital. Okay, we've been able to do more than that. So this is what keeps us away and diversifies us, or differentiates us rather from the conventionals. If the conventionals tell you, okay, we're benchmarking this at 15% per annum, even if they make 100% extra, they are giving you 15. But for us, we come and say, okay, we've shared the first one and you've gotten 15. That's the benchmark. Now we've made another extra 10 or another extra 15. Now we sit down, we now look what's the profit sharing ratio of surpluses, and then we now share that as well. So the prorating basis that we're talking about, where someone gets money monthly, it's based on what profit is gotten monthly, and it's now shared with the investor. So that as well is not a fixed amount. So if the example I gave you that I said the individual was able to rack up to 600 monthly, some months it's higher, some months it's slightly less. So based on what profit is made in that month. I hope that answers the question. Halal, did we answer your question? Okay, great. Do we have any other questions? Ask your questions now, because I want to send forms to everybody to fill after this. So ask your questions now. SMJ, you want to ask something?
Yeah. Assalamu alaikum warahmatullahi wa barakatuh.
Wa alaikum assalam.
SMJ stands for Sani Muhammad Jabba.
Okay, Sani Muhammad. Welcome.
Jabba. Yeah. I came in actually absolutely late. I've been trying to cope all this while.
All right, that's fine.
So
There'll be a recording, inshallah.
I don't know which of the discussion you are right now. But I get a lot of questions from people because I was in the Ariwa Finance Summit, the November 1, and I met the 117 there, and I was trying to talk to them about some concepts about financing precisely construction industry.
Okay.
So the worry we are having here is that my people want finance from the halal funding perspective, just to stay.
Okay.
Yeah, exactly. But they find it difficult to understand which kind of model can be applied or which they can use for construction. And construction is a heavy capital-based investment.
Okay.
So
Okay, I get that. So what I would advise is that for your company or for your group, you reach out to 117 on a personal basis. So we have our contact numbers, and then you can now be directed to whoever is going to be in the best position to speak about financing businesses and what we can suggest to you, what can we offer you, or what advice can we tell you, okay, this will be the best way for you to go about it. So great, you just go to the 117 website. We have a couple of our numbers there, and you can just call anybody and they would attach you to those in maybe portfolio management or whoever is going to be in the best position to have that conversation with you, as it's a very lengthy conversation and a beneficial one as well. So don't hesitate to reach out. Just after this meeting, just put a call across and someone will get across to you. Thank you.
Okay, thank you.
You're welcome. Do we have any other questions? Iman, Aminu, Miss Aisha, Mustafa. We have quite a lot of people here. Layla, Mohammed, Samuel. Do you have any questions with regards to the mutual fund or everything we've discussed in general? Or should I just send across the forms as soon as possible?
So just for our audience to prompt, I would like to call out the numbers, our numbers, please.
Sure.
Okay, so the website is, of course, www.117capital.com. Our phone numbers, I will drop it in the chat box for anyone who wants to contact us.
Junaid, I think a question came in from the chat box. Can you read it?
All right, sure, no problem. Let me open it. Okay, so questions from Malam Muhammad Abdul Salam. He's asking, is there a minimum amount and duration for the mutual funds?
Junaid, I think you can answer that.
Okay, so to answer your question, sir, the minimum amount is 10,000 naira only. The duration, no. Just as Aman Imran mentioned, there is a lock-in period of 3 months. So the reason for that lock-in period is to allow the money inside the fund to stabilize. However, that doesn't mean that you cannot withdraw your money in event of emergency. You can do so. So yeah, that's about it. And the next question from Imam B. Yahya is saying, Salam, I know this was not discussed, but I want to ask, what is the difference between a mutual fund and a hedge fund? So Ms. Malimar, are you going to answer that?
Okay, so I can give you an oversight of what a mutual fund is and what a hedge fund is on a very surface level. So a mutual fund, like I have discussed, I said you pool money from various individuals and put it into a diversified portfolio for it to grow. And for 117, Sharia compliant portfolios. When you speak about a hedge fund, some companies run as hedge funds in it of themselves. And what they do, or their focus is, they usually focus on short-term, higher risk transactions And also, because they focus on higher risk transactions, they focus on HNIs, high net worth individuals. So for example, like in the United States, hedge funds take from $100,000 and above, if I'm not mistaken. And also the individuals have to have, I think, they have to be of a certain net worth for them to be able to invest with the hedge fund. And it's not just every regular day-to-day person that goes to a hedge fund to give them money. So this, I would say, gives you the clear picture of what a hedge fund is, because the transactions within a hedge fund are quite more riskier. So they need to deal with only high net worth individuals that have that amount of risk appetite, the aggressive investors, we call them. So in case you make a loss, the person's whole life is not going down the drain. But for mutual funds, they're more stable. They are more stable, low risk, stable returns, lower amounts, open to everybody, just like this. You can see 10,000 open to students, kids, adults, open to everybody to invest. And this, I would say, is there are more detailed differences, but on the surface level, this is what I can share for you with regards to differentiating a mutual fund from a hedge fund.
Yeah, he's typing. Just wait for it.
You're welcome, Iman. All
Do you have
right.
any questions?
I don't think there's any more questions.
Thank you very much again for our audience for joining us today. In case anyone that wanted to join this session missed out, there's another session coming up on the 31st, Tuesday, 31st of January, same time, same link. So please, we thank you again. We thank you once again. Thank you.
Yeah, and don't forget to follow us on all our social media platforms at 117 Capital on Instagram, YouTube, LinkedIn. Follow us for all of this. Go to the website as well. If you want to register for the mutual fund, don't just go to the website. The forms are there. Fill up your forms and send, or contact any of the numbers Junaid have provided on the chat box. Thank you very much. I remain Imran, and see you again next week. Bye.
Thank you very much. Do have a nice day, please. Thank you.